What are the transfer and pricing implications of structuring a U.S. LLC owned by a foreign entity by a U.S. citizen living abroad? Of structuring a transfer U.S. owned by a foreign. Okay, so then it's a subsidiary relationship, right? So a U.S. LLC is owned by a foreign entity. Now, just to loop everyone into that concept. So transfer pricing is, let's say, a discipline within tax and economics that deals with getting the correct price for intercompany transactions between related companies. So, for example, if you own a foreign entity, like in this person's case, you may own a foreign company. And then you may, as in a non-US company, and you own a US entity, that's fine, no problem so far. But if they share certain services. So for example, there's a shared service in terms of accounting, there's shared services in HR, there's shared services in marketing, especially for digital nomads who, doing stuff, everything is online right now. Those shared services need to be priced in a way that, because you know where people go with this, where I'm going with this. If it is that you have two companies, one in a high tax jurisdiction, one in a low tax jurisdiction, naturally, your intent is to shift as much profit as possible from the high tax jurisdiction to the low tax. I mean, that just goes without saying. And of course, tax authorities have known this for decades, and particularly those in advanced economies, and they are clued up and they want to see documentation that evidences that the price charged for those shared services is an arm's length transaction. So if you need a comparable, you need to do a study, and those studies aren't cheap. I'd say ballpark, a decent study starts at around $20,000 US. But it's worth it for that whenever it is that tax authority does challenge you. And right now, along with taxes for online transactions, transfer pricing, I think that's the cutting edge of where tax authorities are giving attention, because they believe that there's a lot of money to be made in collections in those two spaces. Companies that have been involved in shifting profits to low tax jurisdictions, and companies that are using the internet to avoid taxes completely. So, to answer your question, if it is that you have two companies and they are involved in, they're both owned by the same shareholder, you presumably, they have common shareholders, so there's common ownership, and there's shared services or shared transactions, or maybe one is producing something which the other is buying or selling, or whatever the case may be. You need to take advice from someone qualified and competent in that jurisdiction to make sure that you have the transfer pricing documentation in play, so that when the tax authority knocks on your door, you're prepared to answer them. That's that.
Please subscribe, like, share, and comment below. Our books and upcoming event are available at htj.tax. Email us at help@htj.tax to engage us, to advise on international tax or business matters.